Hello, welcome to Frontier's Monthly Markets Update. My name is Tom Lambert, a consultant on our capital markets team, and I'm here with my colleague Dr. Vivian Xu, who's also a consultant on our capital markets team. So Vivian, there's been quite a lot happening in markets lately with a severe market downturn. Can you give us a brief description of what happened there?
Sure. As you all know, we've seen a major market sell-off at the start of August, and this was followed by an immediate recovery. Among the markets that have been impacted, Japan appeared to suffer the most extreme swing. The Japanese equity held initially declined 20% in local currency, and it bounced back 10% in the next day. This extreme volatility also was reflected in global market as well. The US stocks have also took the heat, especially in the technology sector. But now, after the initial volatility, it's corrected quite fast. And as of the time we speak now, in late August, the market has already calmed down, and in some cases, even bounced back to the level before the sell-off.
Okay, so starting with Japan, can you give us a bit of an outline of what some of the catalysts were that triggered this downturn?
Sure, good question. So it's usually not easy to disentangle the factors that drives a major market crash, because there are usually more than one factors at play, and it's usually quite complicated. What we can identify now is that one of the key catalysts that happened in Japan was Bank of Japan hiked its interest rate twice in recent months. This was a significant deviation from Japan's long-term policy stand, because Japan has historically maintained a very low, even negative interest rate. What has happened over time is that global investors have been taking advantage of that low interest rate by borrowing yen at a low cost and investing in other higher yielding assets elsewhere. But now, with the interest rates going up in Japan, the carrying cost of yen has increased. It becomes more expensive, and it forced many investors to dump the higher yielding assets to buy back yen. And the more investors doing that, it pushes the yen higher. And the higher yen gets, the carry trade becomes even more expensive, and it forces even more investors to unwind that carry position.
Okay, and so what about outside Japan, Vivian? Can you give us a brief description of some of the drivers there that have contributed to a market downturn, albeit not so severe?
Well, in the US, there are several other catalysts that happen at the same time as Bank of Japan hiking interest rate. So one of the catalysts is the release of disappointing US economic data. Particularly, the unemployment rate was lower than expected. And the followers of our market video would know that unemployment rate is historically a reliable indicator to recession. And when unemployment rate spikes up, investors it triggers fear in a market that an imminent recession is coming. That's what happened at the start of this month. Another catalyst is the earnings data for a few big tech firms also disappointed.
What about the response from central banks globally to this market crisis?
So the big picture for global central banks is still balancing between managing the inflation expectation towards target and without hurting the growth too much. the US Fed has left the interest rate unchanged in their July meeting, but the comments from the Fed chair has signaled we're getting closer to the interest rate cut. And away from US, in Europe, Bank of England has conducted their first interest rate cut in August, while RBA and ECB, the European Central Bank, have left the rate unchanged.
Okay, thanks for that, Vivian. They were really helpful insights. And thanks everyone for joining this edition of Monthly Markets Update. We hope to see you next time. Thanks again.